Good evening. I hope you all had a fantastic day in the market. Today was an up and down day of trading, albeit a far less volatile one compared to the recent previous days. The S&P 500 started in the green, but ultimately ended in the red by 0.36%. The Dow had a worse day, ending the day down 0.65%. The Nasdaq never traded in the red, but ultimately only ended up a small 0.15%. Starting right off, coronavirus second wave fears continued to grow today, after it was announced that yesterday Texas had an 11% increase in coronavirus related hospitalizations in a single day. Texas coronavirus related hospitalizations are now 84% higher compared to the levels they were at during Memorial Day. It was further announced that coronavirus related deaths are now projected to pass 200,000 in the US by October 1st. This is an increase of 30,000 projected deaths since last week's projection. Arizona, Florida, Oklahoma, Oregon, and Texas all reported record increases in new cases after reaching all-time highs last week. Quote, "It's not a question of whether we should have reopened when we did or not. It's how we did in terms of the behavior of individuals," according to Dr. Farshad Marvasti, University of Arizona College of Medicine Director of Public Health and Prevention. Getting to the final day of Powell's testimony before Congress, he had various interesting things to say. One of the first things he talked about was about the dangers of pulling fiscal support too early. He said, quote, "I would agree that Congress has already provided significant fiscal support, and that support is now having a positive effect on the economy. We see it in consumer spending, in income data. We see it in payrolls. All of that is helping. I would just note that there are something like 25 million people who have been dislodged from their job in full or in part due to the pandemic. I would think that it would be a concern if Congress were to pull back from the support that's providing too quickly. I wouldn't presume to prescribe exactly what you should or shouldn't do, but I would say it'd be wise to look at ways to continue to support both people who are out of work and also smaller businesses that may not have vast resources." Next, he brought up the Fed's balance sheet, which has been a big discussion recently, as it surpassed $7 trillion. Powell said that this is of no concern in terms of either inflation or stability. Quote, "At current levels, or current plan levels, I think we know now the balance sheet doesn't present issues in terms of either inflation or financial stability. Those were big concerns as we grew the balance sheet during the last crisis." The last bit of his testimony that I would like to share is that he believes that the Fed needs to continue, quote, "to keep our foot on the gas," referring to their efforts to help support the economy and urge Congress to follow suit. He said, quote, "We're not thinking about putting down our tools for a long time," and continued with, "I also think we at the Fed need to keep our foot on the gas until we're really sure that we're through this. That's sort of our intention. I think you may find there's more for you to do as well." And our last piece of news for the day, it was announced that homebuyer mortgage demand spiked to an 11-year high due to rates reaching a record low. The average contract interest rate for a 30-year fixed-rate mortgage declined to 3.3%, down from 3.38%. Mortgage applications rose 4% last week from the previous week, and are 21% higher than 1 year ago, according to the Mortgage Bankers Association's seasonally adjusted index. That was the 9th consecutive week of gains and the highest volume in more than 11 years. Quote, "The housing market continues to experience the release of unrealized pent-up demand from earlier this spring, as well as a gradual improvement in consumer confidence," said economist Joel Kahn. Lower rates also fueled refinance demand. Those applications rose 10% for the week and were 106% higher than a year ago. Refinances had been slipping for weeks, but the new record low rates may have woken up some home buyers to their potential savings. For the sectors, no one ended in the green besides tech. However, it only gained a minuscule amount. Oil and gas was the clear loser today, being down more than 3%. This sell-off in oil and gas comes after many people, including powerful bank Goldman Sachs, see renewable energy being more prominent, as renewable energy is set to overtake oil and gas for the first time next year. Financials, telecommunications, and basic materials were all down close to 1.6% on the day. Our barometer does not tell a pretty tale, as only two baskets of stocks were in the green, and only by a slight amount. Value and core were down altogether, and small cap value had the worst day of them all, being down 2.3% on average. But small cap core stocks were not far behind, being down 2.18%. The largest gain of the day in S&P 500 came from Advance Auto Parts, which is an aftermarket auto parts retailer. Today, they gained 4.2% for no specific reason, but their CEO did purchase 7,285 shares, signaling belief in the company. The second largest gain came from popular video game maker Activision Blizzard, which gained 3.47% during trading today. No piece of news was released about Activision Blizzard recently to support the strong gain. The biggest loss of the day came from tax preparation company H&R Block, which reported earnings yesterday. They had a double beat, as non-GAAP EPS came in at a gain of $3.01 per share, beating estimates by 40 cents. Revenue beat estimates by a slight $50 million, after they posted quarterly revenue of $1.81 billion, which represented a decline in revenue of 22.3% on a year-over-year basis. H&R Block even reported that it has sufficient liquidity to last until tax season 2021. The other biggest loss of the day was from Norwegian Cruise Lines, which lost 8.4% during trading. Norwegian announced during after hours yesterday that they would be extending their cruise line suspensions until September 30th, and some voyages through October 2020. All of the other cruise liners and airline stocks, which have been heavily volatile as of late, suffered large losses, as investors are taking profits from these high beta stocks. Getting into earnings, we only have one company, which happens to be ABM Industries, ticker symbol ABM, which is a facility management provider. Today's earnings were not horrific, as they beat on EPS estimates and came in line with revenue estimates. Non-GAAP EPS beat by 31 cents, as they came in with a gain of 60 cents per share. Revenue came in at $1.49 billion, which was in line with expectations and which represented a decline in revenue of 6.3% on a year-over-year basis. Investors liked this news and currently have sent shares up more than 5% after hours, after shares were down 4.66% during regular trading hours. That is all that I have for today. I hope you all have a fantastic rest of your night. As always, I will see you again tomorrow.